Joining us now is Gil Luria from D.A. Davidson. Gil, it seems to me like in the dot-com era, packaged software companies got challenged by web apps. Didn't so much matter what operating system you had a foothold in. All you needed was a browser. Now, application software companies may be facing a similar challenge from AI platforms. How is it hitting differently across that space?
It's a very disruptive force and will continue to be for a while. I would say that it really hasn't changed the markets for a lot of these companies, that especially in the application software, quite as much as the narrative is. And it may take time for the markets to change as well. This is a technology that's actually not a great fit for business software. Business software is very precise. It's very integrated. There's workflows, permissions, connections. So it's going to take time until new AI software startups are going to disrupt the application software companies in spite of the narratives. But there are places in software where the benefit is very clear. Again, you have to have the data all in one place. That benefits Snowflake. You have to observe all the applications. That benefits Datadog. You're developing a lot more code.
Okay. So, but I guess a question is the benefit kind of moving up the stack? I mean, starting with the likes of NVIDIA, the hyperscalers, then you've got, the data sitting on top of that, and then eventually you'll have the application software. Is it that these legacy names are just missing the boat entirely, or just that the AI benefit wave hasn't quite reached them yet?
It's a lot more of the latter. For now, they're all talking a big game about AI, but it's actually going to take a really long time for it to have an impact. So it's really not an issue for right now. Right now, the differentiation is between companies that have a core business that's doing well, like ServiceNow, as opposed to companies with a core business that's not doing well, like Salesforce. That's the differentiation in application software. And that will only change when these upstarts come up and disrupt the core business. Until then, it's going to be a slow roll, which is why Salesforce got in trouble, because they bet the farm on Agentforce before it was ready, and they neglected the core business. And that's why you've seen this underperformance, while ServiceNow continued to execute very, very well in its core business, and therefore the stock has done a lot better.
So, Gil, let's just stick with Salesforce right now, because it's been a dog of the Dow this year. They obviously just wrapped up an investor day and Dreamforce over the last couple of days in San Francisco. Is it that Salesforce bet too soon on Agentforce before it was ready and neglected their core business? Or is it that corporate America wasn't ready for what Salesforce was trying to roll out, which is what I think Mark Benioff might potentially be arguing recently in interviews, including on CNBC?
Yeah, I think it's both. So they bet on it before it was ready. Companies aren't ready because it's really complicated to change your business software. If you think about the software you use every day at work, when's the last time it changed? It doesn't change very often. And you also have very high expectations for it. The results have to be exactly right when we know that when we use AI software, it's not exactly right, which we have a tolerance for as consumers and as employees. But in the technology stack, there's no tolerance for the numbers being wrong. And so it's going to take time until we can use it in that context. So yes, that's correct. Companies aren't ready, but also Salesforce bet on it before it was even nearly ready, which is why the core business suffered.